So the week ahead, we're going to have US CPI and retail sales, amongst many other key data points from various countries, such as in the UK, the labour market, and we've got CPI there as well. Um, Australia, we're going to have the RBA governor speaking, and so forth. But concentrating for now, sticking with gold and the outlook for the week ahead. So on Friday, if we recall, we were short gold and we just didn't really see any follow through, right? So we got short in the US session, and that was looking like a really nice potential to target the 1850s and prior week's lows, but we didn't get there. And it actually came all the way back up into our break even stop loss. So, not to worry. Moving on, uh, basically, same scenario. We're bearish. We've been bearish on gold for I can't remember now, best part of all of this month. The initial balance for the year is underway, and we talked about that in various articles that I've shown on this channel that I've written for FX Street. I'm an analyst at FX Street, so while we're there, we'll just talk about that. So um, you can look up my stuff under the news section and analysis, um, predominantly the news section, for a week ahead breakdown of gold and anything that encompasses traded gold can be seen in the start of the week's pre-open article that's put out before markets open. As you can see here, 12th of Feb, 5th of Feb, etc. So we've been calling short gold for quite some time. I'll just bring that one up. In fact, way before here. Um, this one. So at the top of this, yeah. So for instance, here we were at the start of the month, and we were right at the top in the 1950s, and we're now down, in, 1,000 pips below. Um, we were talking about this 1,000 pip box at 1925, um, which is essentially what we had drawn, and that's our target. So we're on the way there. Like I said, all of these articles, they're rare to read on the FX Street website. Just type in my name. You can follow me, Ross J. Berlin at FX Street, for these articles. And I tend to keep them flowing, so a workflow template essentially, and in tune with what the market's doing at the time, updates and illustrating how the theses had performed over the week, over the month, over the day, etc. So in this particular case, looking ahead for the week, we've got US CPI and retail sales. Um, so we'd be banking on CPI and retail sales to come in line with the likes of non-farm payrolls and sort of debunk, if you like, the Fed pivot sentiment that's been flowing around the market and stalling gold on the bid and fueling the dollar's recent resurgence. So, in that respect, long may that continue to fulfill our objective down low. Um, so, today's article, I think it was last week's, wasn't it? So, today's article over here. So, how much can the bulls milk in the short squeeze, right? So, what we're talking about there is coming up to go down. Um, and this talks about the last week's article with the targets fulfilled, talking about coming up to go down at that point, and that's essentially what happened. Not to the extent that we would have liked to have seen. We were talking about. See if I can expand. No, I better not. Because it will mess up the TradingView video if I start expanding the screen. Anyway, this was calling for a 38.2 to come down, 38.2 retracement of that bearish leg. What we got, and if that hasn't messed up my video, no, good. What we got instead was a move up into the 70s, so the quarter of the 1800s, and then the move down, and it didn't quite reach the target within that week. That's not to say that we can't see that play out to a greater magnitude over the course of this week. So we'll just have to see how volatile this week is. But that was this move. Essentially, is it's a pretty it's mixed sentiment out there, and that's keeping these ranges refined or shorter, more condensed. So that price action is essentially showing that it's a reflection of the fundamentals. Um, and mix sort of guidance from the Fed with stronger data than expected. So it's kind of conflicting, really. Anyway, so we're sort of coiled. So I'm expecting maybe a bit bigger movement this week. Um, so let's see if we can get that sort of range expansion, and that's what we're talking about in this article. Um, We're talking about being on the backside of the daily trend here, so the bias is to the downside. Anyway, this is all here to be read. If you so wish to go to this article and read that, um, let me know in the comments below in the TradingView community and YouTube if this is of use, and you know what your thoughts are on the week ahead relative to what I'm talking about here. But we talked about here on Friday. This ended up being sort of like a doji day, trapping breakout traders to the downside. So, looking at this new box that we're in between 1860 and 70, so that's our 100 pip box, $10 box on gold. Monday, Tuesday, Wednesday, Thursday, Friday. So we had a series of up days followed by a breakout. You tend to see that you get three levels of rise, three over 3 days, and then the blow off. So that was a high quality setup. On the Thursday, and we wanted to see which we caught, and we wanted to see the follow through on Friday, but we didn't get that. So this is where I'm anticipating, albeit being Monday, maybe we could get a range expansion over Monday and Tuesday, perhaps. Doesn't all have to happen today over London and New York. Could well happen over the course of a couple of days leading into the CPI data on the Tuesday. So let's see how that pans out. But basically, we've got trapped shorts. We've got shorts coming into the market, chasing this breakout, being faked out here. Short squeeze up. Okay, selling again, selling again. So you've got these fresh shorts or stubborn shorts or revenge traders, whatever you want to presume. You know what their motivation is. It's irrelevant. The point is, shorts are in the market, so this could be the recipe for a short squeeze for the day ahead. Is what I'm trying to get at, which I've described over here, essentially, with 1850 as the target to the downside eventually, but my thesis is for an up move. So that would equate to a softer dollar. We're actually seeing we'll have a look at that in a minute, but we've got a bit of strength coming in the dollar to start the day. I mean, I talk about that further down. We go down to the lower time frames. Talk about there being liquidity in the 1870s area. Again, this is all in the article. It can be read. and this being support. So this is the open. This is the day starting over here. That's Friday's close, and we're into the new week, new day now. But what I say is, that's not to say that we can't have a move lower to move up first. So that's what we're looking for in the open. Essentially, overall, back to the daily charts, we are looking for this correction higher. So it didn't quite meet the 38 point. Hold on, sorry. This is the. Bear with me, I paused it here, talking ahead of myself. Yeah, no, I was getting confused with my own analysis. So ignoring the fibos on the left, that those are fibos of a lower time frame. So on the daily chart, we didn't meet the 38.2 or get up into the 1900s for a retest. So the thesis is that there could be more to come on the upside before the flush out and move to the downside, um, is what I'm getting at there. So coming back to the article, um, so we need to draw fresh Fibonacci's because we've already had that break of the correction. So in order to do that, we can just go to the weekly chart to make it simplified, and we can see that the 38.2 of that weekly bearish impulse hasn't been reached quite. It's around about the same sort of area, 1890s, 93. So what we could have for this week is some volatility. So we've got this doji. What we'll be looking for is an engulfment to the downside. That would play into the thesis that we will have a continuation of this fresh bear leg. So we've had 3 levels of rise, 3 days of rise. We've come into these lows here, breaking the 3 levels of rise, and we're looking for a continuation of this bearish impulse. And given the data that we have ahead for this week, and how fickle markets are being at the moment, and how condensed they were last week, we could see, we talked about earlier in this video, a range expansion and volatility, and that could well play into the thesis whereby, as you can see here, look, this is the live chart I talked about, that we can come down to move up. So we're running along this trend line. We've got this liquidity zone to the upside based on these wicks. So we can move up into that. And if that were to hold, then the thesis is to come lower. Then that could be the high of the week, depending on Tuesday's business and then what happens over the CPI. But Monday and Tuesday tend to make either the high or low of the week. So the initial balance of the week is set on Monday and Tuesday, with Wednesday really sort of determining the direction for the remainder of the week within that weekly template. So let's see if we can come up into here. Monday, this could be a London move up, so we get the pump up, and we'll have longs in the market. We'll have shorts coming out of their bad positions, weak hands fueling the bid, and then the New York traders rubbing their hands, pulling up their sleeves to short into all of that length and take that money off the table in the low-hanging fruit trade for the New York session, which I'll be monitoring for. And then this brings us to our thesis for going back to the original thesis, that we're coming down within this 1,000 pip box towards the 1825s. We're already a large portion of that thesis done. We're on these backsides of these trend lines now, and that's what we're talking about for the week ahead. So go and take a look at that article. Save me some time talking about it too much in the video. And have a good read of that if you'd be inclined to do so. And then we'll touch briefly on a couple of bits. I'll do more tomorrow. Um, I endeavour to get out these videos earlier than the session opens. I'll do my best to do that this week. I've just been extremely busy with a lot of other stuff on the side, with new football season starting and head deep in two six-a-side tournaments. So really late nights, very long days, and spreading myself a bit thin. So I'll do my best to get some earlier videos out to highlight the opportunities for the New York session. Um, Again, coming back to Stacey Burke's methodology, all of this has been built around. I'm currently putting together a Stacey Burke sniper system um, for those that like to use um, indicators. I mean, it's totally against what Stacey Burke's methodology, but I've got some background with indicators, and bringing the two together seems to be quite a nice play, and can assist with those entries, those sniper entries, um, and so forth. But anyway, that's for a later date. So sticking with I've just done some analysis on the pound. It's in the news section. If you want to follow me, you can. Ross J. Bernard at FX Street. Get all my news. The technical analysis in particular, very same format with gold, uh, running commentary over a period of days or weeks, whatever it might be, setting targets and theses that can be followed, um, and then it's down to whomever might be using these to aid in their trading to come up with their own entries, um, and criteria for trading rules and so forth in the system. But these tend to give a good insight to the market structure and what might come of for the day's sessions ahead based on that. So, for instance, we talked about the pound in prior analysis. We were looking for that short. We had that correction of the impulse, and we got exactly what we were looking for. We didn't get the continuation that we might have expected on Friday. So, very similar scenario with gold. We might get that for the next couple of days ahead. Some explosive moves. So, again, that can be looked at on the FX Street website, this analysis, but keeping it short and sweet. This is the 1 hour chart talking about coming down in Asia to go up in London to come down again in the US, completing the ATR of around about 114 pips. We've got this liquidity zone up here, and so forth. So that can be seen on the market. Let's see if I can find where I do that analysis. Yeah, so there we go. So we've come down already. Obviously, I mean, this is just an outline of what the price action might look like over an hourly period. We've come down, we've just popped up in the last 30 minutes by looks of things. But anyway, we could be bumping around here, and then for the long in London and move down in New York. So just a thesis. Can't tell the future, don't have a crystal ball, but making a plan and knowing what might lay ahead will certainly cut down your time analysing when you come to your screens in your chosen time frame to do what you want to do. But there we go. So we're running out of time. There's also one on the Aussie which I wrote, but we're going to get cut off before that's seen. But there it is. 10 seconds to explain this one, but we're looking for 69.50. Okay, have a great day and week ahead.